So decent little trade. So when we looked at the original look at it, of course, bear flatteners. Well, that's all we need to know about it, bear flatteners. Bear flatteners. So when we go through that as a process, bear flatteners, what does it lead us to? Where do we go with bear flatteners after this? Well, of course, when we're in a bear flattening market, it's not normal. So we've got to just recognize we're in an anomaly condition. And inside of that anomaly condition, we should see the dollar starting to go up. Well, the dollar's been under a little bit of pressure today. You see the dollar in the background here. So it doesn't all stack up for this as a trade. So we've just got to acknowledge that it doesn't all stack up. So we've got to just recognize that the bond may find biddable opportunities at low prices. As yet, where is that low price? Well, the daily chart tells us where it might be in terms of locations for buying opportunities. So we're still a wee distance away from maybe reaching down into some technical structures. So if we bring it up to the close and opens, we can see we're a little bit closer there. So overall, yeah, I'm not sure that I've got the right story just yet. It looks a little bit mixed. It looks a little bit not necessarily confused, but it's certainly not crystal clear what we should be doing today. So for me, I'm just staying quiet. I'm staying on the sidelines. I'm just picking up a wee bit of business here and there, not getting myself too involved. The big trade for me this morning was the pound Aussie, but we'll unpack that pound Aussie later on in classroom. So that we can show you just how incredible that pound Aussie trade was. It made a lot of money, and the narrative that came from that pound Aussie pretty critical to some of the other stories that have been developing in the background as well. So this is where we're at. This is what we've got. Let's get through this morning's data. Okay, in terms of this morning's data, we had obviously something that's not on this is the German inflation numbers that I pay close attention to, and the German inflation numbers come out in installments. Remember, each individual state posts their own inflation numbers, and in the early stages, it looked as if we were going to get quite a hot print, but it drifted off later on, and we've ended up with a relatively cool print. And remember, as I said, it comes out in stages on this one, so we've got to just take it as it comes out in terms of the releases. As we go forward into today's other numbers here, we can obviously look at the Chinese Cation manufacturing came in strong at 51.8. Still in line with all the expectations prior of 51.7, so it's not massively different. UK house prices went up 0.2%. They were expecting a kind of average drop in the last month. They actually went up 0.2%. Year on year, house prices have went up 1.5% to June, and that's pretty good, 1.5%. Moving forward, manufacturing PMIs out of Switzerland were disappointing at 43.9. And, when we look at the other numbers, they're not really that important to us. Mortgage approvals of 59.9, expectation of 59.9, so pretty much in line. UK global manufacturing PMIs at 50.9, down from 51.4, still in positive territory on the pound. And anything above 50, remember, means growth and just a slower rate of growth on this one. So that's important. Moving into the day session today, Monday, the 1st of July, and obviously US is dominated not by anything particularly early at 1:30. As you can see, there's nothing on the slate here for 1:30. As we move out to 14:45, we've got the manufacturing PMIs, the S&P manufacturing PMIs, that's in an hour 30. And we can see that we also get the ISM manufacturing PMIs at 3 o'clock. So 14:45, 1500 hours. 2 data points for us this afternoon, 2 data points. Do not forget about the first one. A lot of people keep forgetting about the 14:45 as traders. It's obviously one of those unusual times when, you automatically think, let's be clear at 1:30, let's be clear at 2 o'clock, let's be clear at 2:30, let's be clear at 3 o'clock. And then all of a sudden at 14:45, you get a little data point that somebody goes, oh shit, I forgot about that one, and it's going to cause me a pop, and I wasn't aware of it. Well, you need to be aware of it. You need to make sure you're switched on. Keep it alerted if you need to. But 14:45 S&P manufacturing PMIs, 1 hour 30 to go before that comes out. But before that, we've got the cash opens, metals opens, and we'll get a read off of those metals opens as well. We get ready for the week to start and see how we get on. But obviously, it's going to be a shortened week because we've got the American holidays on Thursday. Obviously, bank holiday on Thursday. I think I would normally suggest that most Americans might not be in on the Friday. But the problem we've got with that is non-farm employment comes out on Friday this time round as well. So if a lot of American desks aren't at their desk on Friday, that could lead to some excessive volatilities. And, that excessive volatility could be problematic, couldn't it? Especially when you get a non-farm payrolls release. So for us non-Americans that are going to be at our desks, it could absolutely be a bit of fun. Absolutely could be a bit of fun. UK elections absolutely on Thursday as well on the 4th, but we've already traded that out on sterling today. We'll touch on that, as I said, in classroom this afternoon. I think it was a good trade. I think it was a good solid proposition. It paid out. We made quite a lot of money on the pound Aussie position. And the buy reversals actually also had quite a good response, which is interesting. But we'll be definitely doing that. We'll definitely be doing that when the Americans are all enjoying their 4th of July long weekend for 4 days. But certainly, as I said, they'll come back to the desks with a bit of volatility to deal with from the non-farm on the Friday. Anyway, welcome in, guys. I'm going to grab some lunch and then we'll get started.